Okay, so this past week, or rather, it was actually just yesterday, I was I was on Facebook in a DeFi group, and I was talking about different data points. And one of the users or members of the group asked, for more to show more data. So I'm just going to go through a couple different data points, just two specifically that I like to look at. So I have an extensive background in marketing and advertising as well as software development. Before I got into blockchain, everything, and even still now, everything was all data, right? So with marketing and advertising, we exclusively curated campaigns and targeted off of data points. So when I got into crypto, I was a lot more it was more comfortable for me when I was looking at the market to look at user behavior rather than look at fibs. Now it's not. Of course, I look at fibs too, but with everything that happened last week, and I'm sure everyone knows what I'm talking about. This is with Luna. So last week it brought a lot of attention to where the markets are going to go. And we were already in this position, like where we were worried about where the market's going to go, and people were talking about Bitcoin having an 80% correction going down to 13K. I personally don't see that. The user behavior data doesn't suggest that, although that could change at any time. So first and foremost, this is not financial advice. No one. The other thing I want to mention is no one can really tell you what's going to happen with the markets. Um, it's all about just looking at the data and doing your own research and making um, interpreting that data and making a smart decision. So talking about what happened last week, it was a historical week for volatility, and this is where Luna and UST hyperinflated and collapsed, which was erasing about like $40 billion in investor value. So this caused the LFG, which is the Luna Foundation Guard, which was set up to hold the reserves for Luna and or Terra, and and when the depegging happened, it caused the LFG to liquidate 80,000 Bitcoin. So obviously, this put tremendous pressure on the markets, and Bitcoin traded down just over 21%. So this also, because that was like $3.7 billion. This also put a lot of pressure on other stable tokens or stable coins, and where we saw USDT in a period of 24 hours traded down to just under 96 cents. So that was very momentary. It came back within 24 hours, but it's just highlighting the fact that there are some issues in with stablecoins. Uh, Personally, I was really comforted with what I saw in how the market reacted to Luna. We it dipped down temporarily to just over 26K, but it bounced back pretty good, and it's been hovering. We're at 30,190, and it's in my opinion it's rebounded pretty well. I think if this had happened 3 years ago, where we had two top 10 projects to completely just get erased, I think it would have brought Bitcoin and the whole crypto markets to its knees, where we saw quite a bit of resistance here. So let's go into and check out. Let me pull up this other screen. Check out some of my favorite data points. So I'm a big fan of Glassnode, and there are two different data points that I like to look at when looking at user behavior. One is the exchange balances, and the other is the percentage of supply that's in profit. So Glassnode is a pretty expensive feature, but if you can't afford it and you're an active trader, I definitely would suggest getting it. I think the professional plan's like 10K a year or something ridiculous. Anyhow, so with the exchange balance, you can see that like in the early phases of Bitcoin that they kind of moved parallel for the most part, and then we see two big moments here where, and this is where I think this is like adoption right here, where The orange line is Bitcoin coming onto exchange, and the gray line is the price. So we can see that they're moving quite parallel here through like the early adoption phases, and then you see divergence happen. So typically, what we find is that with more Bitcoin on exchange, user behavior tells us that it's there to sell, right? And then where it moves off exchange, that's an indicator that users are storing it long term. There is a variable here, which is for security purposes, and they should do this, but for security purposes, exchanges will move Bitcoin off of exchange and into cold wallet storage. Again, that's a security protocol. They should be doing that. But still, what that's telling us is that the exchange itself is not receiving enough sell pressure where they would need to provide that liquidity, right, and bring the Bitcoin back on exchange. So where we see the price dip significantly, like right here, and the exchange, the amount of Bitcoin going on exchange, this is this is where we're seeing that as Bitcoin hits the exchange, then the price drops, right? And then inverse, where we see Bitcoin drop off exchange, and then we see the price go up, and that's that correlation because the with less supply, so supply and demand economics, with less supply on exchange and more supply in cold storage, it's going to raise the price of the token because if the demand is there, of course. So anyhow, looking at this, we see this is a key moment right here in our history. So on March 12th and March 13th, that whole week, this is where COVID started shutting down everything. So we see that there's a pretty big spike right here, and right as we see that spike of here we can zoom in, but right as we see this spike right here of Bitcoin hitting the exchange, we see a big drop in price. And right here is where everything changed for Bitcoin as far as I can see on the data. And so going back out so we can see it full, here's where we start seeing after the COVID shutdown, here's where we start seeing a huge rebound with the Bitcoin price. And it effectively goes from, without another major correction, it goes from, I think the day ended here at 5,000, but I'm remembering that it really went down to like 3,800, goes all the way up to 70. Or sorry, this is 63. So, and this divergence right here is where we see hyper growth. So this is where the supply again is just continuing to go down on exchange, and demand is soaring. So again, supply and demand economics that is going to show us why the price went up significantly, because there's less Bitcoin on exchange. And again, right here where we see that Bitcoin starts going back on exchange, we see the price falling. So if we go into last week and what we see from last week, and this is why I'm still kind of comforted, it'll be interesting to see what happens in this next week or two, to see if this does, if we look at this like resistance or support lines, if this ends up being a support line right here. So, and that's what I'm really looking for, is if this continues. So we had that huge spike, and then you see the price drop down, and then immediately, we found support in the market, and we start seeing Bitcoin move off exchange again. So this is what I'm going to be watching right here. If we see that this resistance line right here, or I think I would look at it inversely. I would look at this as the support line. If this holds right here, I'm going to be very comforted in where the market's going, and I'm not going to see it going down to 18,000 or 16,000, because the supply is not there, right? So, and then also we have other external factors at play here, where we're looking at governments incentivizing people to hold Bitcoin. This, I'm referring to Germany. We're looking at Fidelity and BlackRock and other major institutions that are rolling Bitcoin and other cryptocurrencies into 401k plans or long-term investment plans. These are all long-term holdings, right? So again, no one knows what's going to happen, but from what I see, if the balance on exchanges continues to stay below 2.5 million or so, 2.55 million or so, I think we're going to be in good shape. The other data point I like looking at is the percentage of supply that's in profit. So what this is showing is what it'll do is it'll track when a wallet purchases Bitcoin and at what price, and then correlates that to where it is currently. So right now this number is going down, and that is concerning. But right now, 53.73% of Bitcoin in supply is in the profit, right? So that is pretty low. We definitely want to see that higher, like significantly higher, like where we saw where Bitcoin was, and of course where Bitcoin was trading near 70,000. You know, you've got, of course, 99% of people. I mean, that's very typical. We want to get back in that. So what we see here is on user behavior is when how much loss is someone willing to take before they offload Bitcoin. If they're a long-term holder, then they don't really care, right? So like for myself, I treat a lot of my investments like 401k. And this is where I'm just constantly buying with every paycheck that I get. I allocate a certain amount to cryptocurrency and I just buy. I don't really care what price it's at. I'm in the long haul for this. And I think personally I like trading that way. It also takes a lot of the stress out of my life, because I don't care if Bitcoin goes down to 13K. That just means with next week's paycheck I'm gonna get a better deal, right? So but I just don't know if I see it, except for the percentage supply and profit is pretty low. So user behavior is going to show us that, you know, once we dip below 50%, 45%, this is where people are going to start either taking profit or taking a loss. It also depends on the news that they're hearing and what is like the sentiment of the market, which is pretty low right now, especially with inflation, and how that is going to determine, you know, do they think it's going to go low? Because if they think it's going to go low, then they're going to try to hedge their losses, right? So they'll take a loss and sell at, let's say, like 28,000 or whatever, and they'll try to even double up and buy at 14,000, right? So if they sell 28 and then it goes down to 13, they get back in at 14, they just doubled their holdings. It's a very very risky play, especially since the market is quite volatile and there have been more institutions trading now than ever before. So, you know, if you try to make that play, it can quickly turn the other direction, and you could find yourself buying Bitcoin even higher than where you sold it, and now you've lost even more. This is where it kind of turns into a gamble. So obviously, more people that are in profit. This is the point. Key takeaways. More Bitcoin hits exchange, the user behavior is going to show us that it's there to be sold. More Bitcoin that leaves exchange, behavior is going to show us that it's there to be stored long term. More users or more supply that's in profit is less likely that someone is going to sell. The lower the profit margins go, like right now we're at 53%, the more chance we're going to experience more volatility as people start taking the small profit that they have, or they start cutting their losses and trying to buy the dip, the lower dip. So anyhow, it's probably a bit longer than I intended it to be, but if you found it useful, cool. If you have any questions, feel free to reach out to me, and I'm always down to have a conversation about crypto. Awesome. Well, take care.